What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is September 2nd of 2017. So as you all know, if you watch my channel, I always talk about the timed philosophy of investing long-term in cryptocurrencies rather than trying to trade them and swing the market. There's a big reason I say this because as someone who has 6 to 7 years of trading in traditional equities markets, meaning trading stocks, and also being interested in foreign exchange markets as well for currencies, I've taken what I've learned from those years and transferred it into cryptocurrencies. And I've learned that a lot of the same principles apply. The biggest principle, though, is the separation between the returns of traders and the returns of investors. I'm going to tell you all a statistic, and this is the biggest reason why I advise the majority of you, and I say it over and over again on this channel, to invest rather than trade. Okay, you ready? The big statistic that I always keep in mind is that 90% of all traders lose money in the long run. 90%. Now, a lot of you who watch my channel are probably a little more active than most traders or even investors as well. You might be out there doing your due diligence, learning how to use technical indicators, staying ahead of the competition, and you might even be returning a profit. To those of you who have, congratulations, you have been on the successful end of the traders. However, I want you to keep in mind on one fact. Are you keeping ahead of what you would be if you just simply long-term invested? A lot of people who are traders get stuck at that one question, and they don't actually have on the side a tracker that tracks the portfolio they would have held if they just invested long-term in some of the big winners. And it turns out, statistically, again, that the long-term investors usually beat out the traders. Even in the returns, for the 10% who make it, they still don't have enough to backbone the return of the long-term investor. So, that all being realized, I want to teach you all how to really reap the benefits of the long run of cryptocurrencies. And for the mass majority of you out there who just want to invest in cryptocurrencies and not have to worry about it, it's a lot less stress and you get a lot more in return for the lack of stress rather than in trading where you're putting in so much stress, so much work, and you're getting a little for your work. So, that being realized, let's go ahead and today I want to present to you all 5 lessons that I've learned with crypto investing and how to do it properly. They're not complicated, you don't have to be a rocket scientist, and it's a great place to start if you want to invest in Bitcoin and other cryptocurrencies in the space. So let's jump right into it, folks. So lesson number 1, cut out the emotion. Okay? Whether you've traded in traditional equities markets or you're trading in cryptocurrencies right now, you probably know that you should not trade with emotion. I think we all can say, of course, yeah, that would be bad. We should be trading with strategy, right? Well, I'm going to tell you right now, about 90% of traders and investors don't trade with strategy. They trade with emotion. And a lot of the time, they meet one of these many mistakes that are listed, in any market. You can find this in any case scenario, if it's in stocks or cryptocurrencies. The biggest mistake that people make is they either FOMO or FUD. So as an investor, you do not want to FOMO or FUD. Now, what do these mean? If you're new to cryptocurrencies or if you're new to my channel, we use these terms a lot in the space of cryptocurrencies, and they stand for different principles that are relatively similar. FOMO stands for fear of missing out, meaning that, let's say, for example, Bitcoin is rallying towards 5,000, and you're like, oh man, Bitcoin was just at 1,800, a few weeks ago. I need to get in now. I need to buy it right now. And then you buy into it around 4,800, 4,900, and then it drops down like a rock. And we're going to see that's exactly what happened to Bitcoin today. It's a primed example of letting emotions run over your actual logical thinking and buying into something when it's way too late, and then you're going to be holding someone else's bags where they got to lock in their profits from buying low. And the same goes for FUDing. FUDing stands for fear, uncertainty, and doubt. So when you FUD on the market, that means, let's say, for example, you bought something at 2,000 and now it's down to 1,600. You're like, oh my God, I need to get out. The market's crashing. Time to sell. And then right when you sell, it rebounds up to $2,600 in the next few weeks. That's a perfect example. Letting emotions ride over the long-term thinking, okay? So don't FOMO, don't FUD, and we'll visualize what that looks like in a minute. Second is don't be misled by the headlines, okay? So if you see an article that says Goldman Sachs, the financial giant of the world, Goldman Sachs says Bitcoin's going to be at 10K next month. Are you really going to trust a headline to make your investment decisions? Don't let the headlines lead your trading decisions. Those financial analysts who were also calling Bitcoin a bubble a few months ago, know nothing about cryptocurrencies. They're just as helpless or lost as you might be in that case scenario. Okay? So again, don't trust financial analysts because quite frankly, a lot of them don't understand blockchain or cryptocurrencies in the slightest. So again, don't follow headlines, don't let it determine your trading decisions, and don't let those lead you to FOMOing or FUDing on cryptocurrencies, okay? And then the last one, this is a core strategy you can use as a long-term investor. One of the first things you should do whenever you're considering buying something or selling something. Ask a fundamental question. Ask, for example, is Bitcoin really worth this price? Is, this altcoin, NEO, is it worth the current valuation that it's at right now? Is the tech, good? Has the fundamentals changed on the company, or sorry, not the company, the cryptocurrency, to really justify this drop in price action? Ask simple questions like that. Sit back, don't get emotional looking at the price chart. Think, okay, this is down 10%, or it's up 10%. Is this justified? And according to whatever you get out of it, apply your trading strategy as you will. So let's go ahead and, as I said, I don't want you to be this guy. I want you to keep it calm. I want you to keep it cool. I want you to look at things in the long term. Always be 2 steps ahead of the market rather than 2 steps behind. And if you do these simple strategies, you will be way ahead of most investors. So we're going to go here to Bitcoin here. We've got our cut out the emotion principles over here. And I want to go ahead and show you what that can look like in real time in price action, because as much as these are pretty simple principles, it might be hard to really visualize what it looks like on a chart. So let's go ahead and take a look at Bitcoin. We all know Bitcoin if we know about cryptocurrencies. I want to show you all how general and simple this philosophy is, okay? So on my channel, we've been talking about how Bitcoin has been overextended. As much as I'm optimistic about it in the long term, we all know that the market has had an extremely fast rally. We've gone from around $1,800, $2,000 down here where we saw the rebound, all the way up to almost $5,000. Can you believe it, folks? I mean, this has been a massive run-up, only a month and a half. So this leads me to talking about FOMOing. A lot of you bought Bitcoin somewhere up here. And the reason you did was because you saw, oh my God, Bitcoin's gone from 1,800 and it's at 4,000. Oh God, I gotta buy it now. I'm gonna miss out on the run to 10K. That's a perfect example of FOMO, because quite frankly, I know a lot of people over the past week bought anywhere on these past 3 daily candles. Because of that, they're now down on their investment. Bitcoin dropped 7% today. Actually, in its total, it dropped around 8%. And it might continue down. I've been telling you on the channel, don't buy into it. It's way too overextended. And you don't buy at fresh highs. You buy at lows. FOMOers don't know that. FOMOers let the emotions take over and they lose money. They're holding someone else's bags who got to sell it when they bought, those other investors bought way lower than where they're selling it. So, again, don't let FOMO get you. And the same goes for FUDing. Let's say, for example, you bought Bitcoin down here. You already bought it at a dip comparative to its highs at 3,000, and you believe in it in the long term. But you see Bitcoin's going down here, and again, you bought here at the $2,500 range, and you see Bitcoin come down to around the $1,900 range, and you're like, oh my God, I should probably sell. I need to get out of my Bitcoin. Don't sell your cryptocurrency at fresh lows unless it's triggered one of your stop levels, which we'll talk about that in a little bit. But if you're generally investing for the long term, you want to take a very simple approach to this, you don't sell down here because quite frankly, and more likely than not, it's going to spike back up and go, in many cases, above where you bought it in a few weeks or a few months with how fast Bitcoin's moving, as well as other cryptocurrencies. Don't be caught FUDing. Don't sell it off to someone and give them some cheap Bitcoin or cheap altcoins. Buy low, sell high. Okay, we're going to reiterate that through the video, and I know that's a simple concept you probably heard if you ever learned about markets, but it's very true. Okay, so remember those principles. Don't FOMO or FUD. Don't be misled by the headlines, and ask fundamental questions. Is Bitcoin really worth its valuation up here? Ask another thing too. This is the one last one I'll leave you off with on this topic. As an institutional investor, when Bitcoin was down here at $1,800 and they had an opportunity to buy somewhere in the $1,800 to $2,000 range, is an institutional investor going to buy something that has gone up more than 100% in a month and a half? Do you really think they're going to buy up here? Do you think they feel safe? Is their risk to reward profile looking good? No. No major institutional investors are buying up here. They're buying down here. Okay, guys? That's always a key thing to keep. Or at least the smart ones are buying down there. And you can see, look where the majority of the volume was on the candles. Okay, these ones down here, these are the volume charts. Keep that in mind. Alrighty, going on to the second lesson, diversify your holdings. This is an extremely important part that so many people forget when it comes to investing. I know a lot of people who left comments, I'm all in on something, holding only Bitcoin. I really think it's the king of crypto, whatever it may be. You know, everyone's got their favorite coin. If you do not diversify, you are set to get roasted in the long term. Your returns are going to be ripped out of your hands, and the crypto market as a whole is going to beat you out. The whole cryptocurrency market, that's even including all the crappy coins, they're going to beat you out because you didn't diversify, okay? So again, you don't want to put all your eggs in one basket because quite frankly, Bitcoin is not invincible. Ethereum is not invincible. Litecoin, Ripple, and even my favorite Neo is not invincible. So you've got to keep that in mind, and you've got to do your due diligence and stay diversified. The second thing is to pick winners and undervalued players. Now, what I mean by picking winners are long-term runners that have continued to run up for quite some time. So, for example, Ethereum, Bitcoin, Ripple, Litecoin. I know I was just kind of bagging on them, but what I mean by that is so long as you're staying diversified, pick winners, pick ones that are strong, that have maintained a long-term uptrend and show signs of adoption, good tech, good team, and in general, a good market to tackle that could be a multi-billion, if not trillion-dollar market. So that's a good sign, a few good signs of winners if they can meet those. And then also, you want to look for similar coins that are undervalued that meet those same core principles. They just might not have the adoption or the media coverage, or maybe they're still functioning and working on their tech, but they've got the greatest team to meet on that promise of developing solid tech. Whatever it may be, look for undervalued players as well to add that might be small caps or mid caps that really could be good additions to your portfolio as well. And then third, but not least, is to buy coins you feel safe holding for more than 2 years. This is a philosophy I always tell you all as a long-term investor. Even if you're trading cryptocurrencies, I want to really reiterate this. You should not buy anything that you don't feel safe holding for 2 years. And the reason I say that, I know it seems kind of strict, is because you really should believe in what you're holding. Okay? And if you can attest yourself to holding something for 2 years, well, you don't really have to hold it for 2 years, but if you can really tell yourself, yes, I'd be fine holding this for 2 years, and be honest with yourself because you're the only one who's going to critique your own strategy and your own decisions. If you can actually say that to yourself, that should be a relatively safe investment, or at least it shows that you've done your due diligence and you've done your research and you know what you're putting your money into. So very important kind of philosophy to take in. Alrighty, lesson 3, add on pullbacks. This is the way where you can apply some trading strategy into your investing. And it's a lot of the kind of fun part of cryptocurrencies because whereas everybody's panicking, you're not panicking and you're looking to buy. Okay? So you're doing the opposite of what most people will be doing in the market. When the market's FOMOing, you're looking to say, okay, we're probably going to be getting a pullback here. Everyone's very optimistic. Everyone's very greedy. And then when things are pulling back, when everyone's scared and selling off everything and giving you the discounts, you're going to be looking to add. So in this area, we're going to add on pullbacks. But what are some strategies we can use? Well, as always, you want to add to winning positions. As we said, we want to hold on to the key winners in our portfolio, okay? And that goes for some of those undervalued coins. If they start doing well, and the ones that have still yet to really go on the radar, add to those positions. Have more in those really long-term potential cryptocurrencies that we see going off and mooning in the future, along with our long-term returners, the ones that residually bring in double-digit returns each year, okay? And then next up, buy low, sell high. I was talking about it earlier, and I will reiterate it again. Buying low and selling high, it's such a simple philosophy, but it literally is what's going to make make up the difference between losing and making money in cryptocurrencies and winning in cryptocurrencies. There's no dodging it. Buying low is usually, the best place to add on your positions and mitigate your risk profiles. You don't want to buy at fresh highs. Don't FOMO. You want to do the simple investor philosophy of buying low and selling high. It's proven through history, and it will prove itself again in cryptocurrencies as it already has been. So, the third point is also patience is key. 90% of people buy into hype, meaning they FOMO. Patience is the step you need to take. You need to be willing to wait for those double-digit pullbacks in market. I mean, percentage-wise. So, for example, Bitcoin pulling back, for example, was pulling back from 5,000. Okay, we've been saying that we're going to wait for 3,500 or 3,600. Now, I don't know if it's going to go all the way back there, and there'll be some indicators I can use to really tell whether or not it'll go back there or not. But that's a level I feel comfortable adding in. I don't feel comfortable adding at 5,000. That's at all fresh highs. So, being patient, waiting a few weeks to a few months to really get that level where you feel comfortable adding and buying in more will pay off in the long run. That patience is key. I'm going to show you what that can look like here. So we're taking a look here at one of my favorites. I talk about it on the channel all the time, NEO. Now, a lot of you, for example, when NEO was going on its bull run, I had sold most of my position in NEO. And a lot of you were saying, Nick, you said not to buy past a million Satoshis, and now it's up to 1,250,000 Satoshis. Screw you, I'm getting in. And a lot of you bought, and now you're way down on your money. I told you all, you do not buy after an exponential run like this. I'm no guru or whiz, and I never proposed myself to be, but I do know that generally speaking, you do not buy in this range. Sorry, let me draw the little ellipse tool. This thing is not always easy to use, but you do not buy up at the highs, okay? This goes again, buy low, sell high. And you don't want to be caught buying in at these levels. Now, what you do want to be caught buying in is down here, when you've had more than a 50% pullback. The reason you do that is because not only can you buy double of what you would have bought up here in the sense of quantity due to the price drop, but along with that, the volume is silent. Look at all this buying volume up here. This was all the FOMO we were talking about. The 90% of people who get into something that's peak and they lose. That's where they are. That's not all institutional buyers. Institutions add down here. They buy when things are quiet. They add when something has already had a pullback, as we saw on NEO over here. Okay, they add all throughout this area. They're doing the same here, if anything. If you really want to know where institutions are adding, they're much more likely, whether there's no guarantee, though there is no guarantee right now, they are much more likely to add down here when something has had more than a 50% pullback than add at fresh highs. Simple philosophy. So, again, those same principles apply in any cryptocurrency, okay? So keep that in mind and be patient and add on the dips. Again, I want to go back real quick. And if, let's say, for example, you had been holding NEO down here and it's been pulling back. If you got some extra capital, add at these lows. Add after usually a 50 to 60% pullback. Those are great levels to look for on the big runners, okay? So going on to lesson 4 as we go through the tutorial here, establishing strategy. I can't tell you all how much this is such a big factor of investing. Whether it be trading or investing, the mass majority of people do not put a strategy in. In long-term investing, they just say, well, I'm going to hold this because I think it looks like a cool cryptocurrency, or this guy told me so. I'm speechless when I hear people say that, because I don't get how anyone has, maybe it's just the different mindsets, I don't get how anyone could think it's as simple as, oh yeah, well, this guy over here is a whiz and he says that this is a good buy. I'm going to put my money into it. And the same goes for trading. Some people say, well, this guy said this is a good trade. No, don't listen to anyone like that. And even at the end of the day, I'm going to tell you right now, don't listen to me. Don't just simply take my opinion for it. I get so many people who come to me and ask, what should I drop $1,000 into? That's not how easy it is, folks. You've got to establish your own strategy, and you have to make sure to plan it out how you want to get paid in cryptocurrencies. So let's look down these principles. First and foremost, don't place a trade until you formulated your game plan. Remember, so many people FOMO and FUD. They get in and get out of cryptocurrencies faster than they need to, and they also don't have a strategy getting into it. Okay? So again, before you step into any trade or any investment in cryptocurrencies, have that strategy planned ahead of time. It's very key and it's very fundamental to succeed in the long term. Second, on the topic of setting up your game plan and coming in with a strategy, set your stop limits, okay? This is something that I even recommend. I think a lot of long-term investors probably wouldn't, but I recommend setting in stops. Now, you want to set them wider comparative to trading, and I'll show you what a stop can look like. But you can set these through your exchange, and it's basically a level that mitigates your risk. So let's say, for example, you're buying XYZ coin at $100, and you think it's going to go to $200. But at the same time, you don't want to, have it go below $80, okay? So your risk profile is a 20% loss if you're going from $100 to $80. So you're only willing to lose 20%. That means you're going to set your stop at $80. That's pretty fair. There's only a chance that you will lose 20%, no more than that, because you have your stop set to trigger a sell order when it reaches that level. It's a very powerful tool, and it can mitigate your risk on any investment. And then third, long-term price targets. Along with building your strategy, what's your long-term objective for this? So for example, we always talk about NEO, and we're going to look at NEO as an example. We always talk about being China's Ethereum. So when I say that, I mean, I think this thing could go to $300. I really do believe that fundamentally because I've done my research and everything. So I have a certain price target in the sense of USD valuation as well as Satoshi measurement for Bitcoin. So if we go over here to NEO, I'll show you exactly how I can approach that. So if we go here on NEO, we can go here to our, we'll do our horizontal tool. Let's say, for example, I put a buy order right now. Let's just say we bought right at these levels. Actually, no, we'll do it towards a bigger even number. Let's do, we'll do 700,000 Satoshis, okay? So we've got our buy order here. We got it in NEO. We bought on a dip. We're doing it on the right end rather than buying it at fresh highs. So now that we've established that, we should, before even buying, I know I might have said we bought. No, we haven't bought yet. Before we even buy, we're going to go ahead and set our stop level, okay? So what level do we want to risk the price action going to and taking a loss on, okay? Well, for simplicity's sake, let's pick a big even. Now, usually you want to do this in percentage points, but for simplicity's sake, I'm just going to say, you know what? I don't want this to go below, if this goes below 600,000 Satoshis, I'm getting out. Okay, that obviously means that it has more pullback to come in, and I'm going to wait until I can get it at a lower price, okay? So you've mitigated your risk to 100,000 Satoshi loss per NEO that you buy. Yeah, it's a decent loss, but at the same time, you know, let's say, for example, NEO has a terrible event happen to it, and it goes down here to 250,000 Satoshis. We wouldn't want to be caught holding those bags now, would we? So we have that strategy, we have our sell order set in, and you have to place that in your exchange. So now that we've got that established, we can start setting price targets. Well, where do we think that NEO could go to next? Well, it had a run up. And the last time we went up to 500,000 Satoshis, and then we ran up to around 1,250,000 Satoshis. Well, let's think of a big even. Where could we see it next time? Let's go ahead here and expand the chart. Let's see if I can stretch out a little bit. I think I'm going to set a sell level, or really see this go up to, and I know this might sound crazy to some of you, but I've been saying this is going to have an Ethereum style run up, so let's go ahead and set a level a little bit below 1,750,000 Satoshis. So I think that it's going to reach that level eventually. So here's our levels. We're believing that our risk level right here is only 100,000 Satoshis of a loss, okay? So it might go down there, trigger it, okay, whatever, too bad. But if it doesn't, if it holds there and it starts pulling up, if it makes it up to this level where we sell it, it might take some time, we might have to be patient. We are going to more than double our money. It is going to be a fantastic investment if we make this true. Not to mention, if it keeps up with Bitcoin like that, that means the USD valuation is probably much, much higher than it was over here. So again, this is how you do long-term investing. You don't want to look at this in, even sometimes you don't want to look at it in the daily. You're not looking at the hourly or the 5-minute. You want to look at this at the daily, the weekly, and the monthly. Look at these long-term cycles. Look back to history. It is doomed to repeat itself. You have the pullback, the 50%. Up here, you have the fast run up just like you had back here, and then the 50% pullback. Buy it cheap, buy low, sell it high. Simple, repetitive strategy where you can make a ton of money, folks, okay? Just keep those ideas in your mind and you will win in cryptocurrencies. It's not complicated. There's tons of money to be made if you do this right. So that's a good example of utilizing those principles, setting your stop limit and setting price levels as well, coming in with that strategy. Lesson 5, and last but not least, do your due diligence. Okay, now you might have heard me talk about this term earlier, and you might not know what due diligence means. Being diligent about researching into cryptocurrencies, being patient in general, and reading up on information are some of the most factual and evident examples of being a successful investor. And the reason I push you guys to do this is because, again, just like with trading or with investing, 90 to 95% of people don't do these things. They don't spend the time to watch videos like this. They don't spend the time to dig deep and really do the research. No, they chase the headlines, they chase the FOMO, the FUDDing, and they don't really learn the fundamentals. You all here today have an opportunity. You are in an extremely early market, such as cryptocurrencies. There is so much money and so much purchasing power that you will be able to obtain from benefit of this market. The only question is whether or not you're willing to be patient. Don't eye the charts 24/7, meaning don't watch all your investments 24/7. Stop refreshing your mobile app telling you your portfolio. I know some of you out there do it. Don't do that. Research. While you're not checking your charts, while everyone is chasing price action, you're going to be researching fundamentals and play the bigger swings, the big money movers. You're going to be making the serious cash because you did that extra research that 98 to 99% of people aren't going to be willing to do. And then last, on the part of research, read books, watch videos, and use other resources to help you build your investing philosophy. I know this sounds generic, but read up on people like Warren Buffett. Read up on people who have made it investing in things for the long run. And, if you like it, you could keep on watching my channel. I'd really appreciate it, okay? A little bit of shameless self-promotion at the end. But again, really, watch people and listen to people who have made it successfully. I have 6 to 7 years of experience. I'm no whiz, but I've been very successful with what I've done. I've grown better as I go. It's because I learn from my mistakes. And I know that you out there who are struggling right now can learn from your mistakes and become a better investor and even trader. So, it's not an impossible task. You can do it. I believe in you. And if you follow these core principles, it really relies on one thing, which is discipline. Can you stay disciplined? Can you, watch this over a few times, really learn these principles? And if you can, I guarantee to you folks that you're much more likely to turn a profit in the long run. Well, I'm glad you all joined me for this. I'm glad I could do something more on investing and really talk about basic investment philosophy and fundamental principles. I hope you all enjoyed the video. I hope you all look at things more in the long term. Hashtag long-term investing, as I say on this channel. It's our trending hashtag we always use. But until the next video, everyone, I will see you all later. Take care.